Work management platforms. Ugh, endless onboarding, IT bottlenecks, admin requests. But what if things were different?
We found love in an open space.
Monday.com is different. No lengthy onboarding. Beautiful reports in minutes. Custom workflows you can build on your own. Easy to use prompt-free AI. Turns out you can love a work management platform. Monday.com, the first work platform you'll love to use.
When you think about businesses that are selling through the roof, sure, you think about a great product, a cool brand, and brilliant marketing. But an often overlooked secret is actually the businesses behind the business, making selling simple. For millions of businesses, that business is Shopify. Nobody does selling better than Shopify. They're the home of the #1 checkout on the planet and the not-so-secret Shop Pay that boosts conversions up to 50%, meaning way less carts going abandoned and way more sales happening. So if you're into growing your business, your commerce platform better be ready to sell wherever your customers are scrolling or strolling, on the web, in your store, in their feed, and everywhere in between. Businesses that sell more sell on Shopify. Upgrade your business and get the same checkout Allbirds and Skims use. Sign up for your $1 per month trial period at shopify.com/start selling, all lowercase. Go to shopify.com/start selling to upgrade your selling today. Shopify.com/start selling.
Welcome to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to discuss all of the incredible possibilities that can take place as an investor when we let go of the things that we cannot control. Let's go ahead and kick this episode off with what took place last week in the market. Last week on Monday and Tuesday, we saw a very strong rebound in the market. Analysts were suggesting that we were going to have a V-shaped recovery. A V-shaped recovery is when the stock market is taking a sharp dip down and then it makes a sharp recovery back up, forming the shape of a V. While a lot of analysts were predicting a V-shaped recovery earlier in the week, I did mention on Morning Bread, let's not get too excited by this narrative and by this potential recovery that we are currently seeing. Why did I say that? Because to me, it really doesn't take a genius to understand the volatility is not behind us. So it's hard for me to understand actually how an analyst can be so certain and start to say that we are in a V-shaped recovery and this is obvious. It's just not obvious. After watching charts for many, many years, I have a clear understanding that I want for everyone listening to this podcast to also grasp. The S&P 500 chart is a chart made up of the top 500 most powerful American companies that are also the most powerful companies in the entire world. I talk to you about this all the time, but what I really want you to begin to understand is that the S&P 500 as a chart is also the manifestation of the most powerful people in this world that are invested into the most powerful companies in this world. And so naturally, the S&P 500 is nothing but a measurement of how we collectively feel about the economy and about business, consumption, and production. Now, with that being said, it's important that you understand that it is not that I am saying that an analyst can never predict a crash or can never predict a recovery, because I definitely think that is possible. There are times you all have heard me on this podcast through my work of 5 years of disseminating this information when I have said we're headed towards a crash and we're headed towards a recovery. Absolutely, someone that is tapped into the market can have that sentiment and be able to predict that based on all of the information that is coming in and how the market is reacting, most especially as an investor ourselves. What I am saying is that right now, in this moment in time, what I know for certain and what I think should be very obvious to all of us is that we cannot predict a recovery and we cannot predict a crash. What we can expect to predict is volatility. And why do I say that with certainty? It is because we are unable to predict not only how this administration is going to move forward, but how the world is going to react to the way this administration moves forward. There is no way for us to currently predict that with the data that we have coming in and the way that this administration behaves erratically. That is what we know for certain. And so right now, at this moment in time, I think it is too soon to say that we are moving towards a recovery. I think that we are still sitting on volatile times. This episode will be released on April 2nd. We will see by the time this episode is released where we land on tariffs. Will he continue to kick the can down the road? And how will the other countries react? We still have to sit through the process of at least another quarter for us to see how publicly traded companies and other industries that are not publicly traded will be impacted by these tariffs. And so from my perspective, right now, I think that we have at minimum 9 more months of volatility, unless this administration completely pulls back from impacting this industry. I do not think, however, that is going to happen. I have watched this president time and time again measure himself by the growth of the stock market. What does that mean for us experiencing this economy? It means that we have a high chance of experiencing a recession. It means that we have a high chance of experiencing inflation. It means that we have high chance of experiencing massive job layoffs. It means that we have a high chance of seeing really terrible earnings calls. It means that we have a high chance of experiencing businesses deteriorating. It means that we have a high chance of the stock market being volatile, but also a higher chance of seeing the stock market continue to deteriorate. I realize that sounds absolutely terrible. However, it's important for us to understand that these types of economic climates is what breeds millionaires. While the entire economy is shrinking, what begins to happen is we either also shrink or we begin to expand out of a natural desire to continue moving forward, to continue feeling expansion. In every single economic crisis, we have incredible ideas that are birthed. When our economy begins to contract, our mind begins to expand. The contraction of everything around us is the perfect breeding ground for new opportunities and new ideas to be created. For most of us, we don't see the world that way, and so we freeze and we also begin to deteriorate. I want to offer a completely different perspective. And what if this entire climate is being created on purpose for those that understand to begin to experience expansion? I want you to experience expansion and look at this as a buying opportunity. When I was younger, I went back and I started to learn about different economic cycles that were taking place. A really big one that affected me was the one in 2008 that I know it affected almost everyone listening to this podcast. However, there were big winners from that experience. Bitcoin was born, Netflix was born, Airbnb was born, Uber was born. This is because it forces us to begin to expand and come up with new and fresh ideas. This is the time when we lean in. This is it. These are the times. I don't know how long this opportunity will last. Again, I am guesstimating that we will see volatility for the next 9 months. But if what is executed eats at what is currently built, then that means that we will continue to deteriorate. And that may be scary for some, because if you begin to buy into a stock right now at this level, at this price level, and it continues to go down, that could produce fear instead of looking at it as this is where I lean in and buy more. Now, last week, I told you it's important to not be speculative unless you have the money to do so. For a lot of us that we are just starting out building our wealth, we don't have that luxury to invest into speculative stock. It behooves us to invest in large blue chip companies that can stand the test of time.
Dear old work platform, it's not you, it's us. Actually, it is you. Endless onboarding? Constant IT bottlenecks? We've had enough. We need a platform that just gets us. And to be honest, we've met someone new. They're called Monday.com, and it was love at first onboarding. Their beautiful dashboards, their customizable workflows got us floating on a digital cloud 9. So no hard feelings, but we're moving on. Monday.com, the first work platform you'll love to use.
On average, you'll have to wait 31 days to see an OBGYN. And if you're dealing with an infection or outbreak, you know you need care fast. That's where WISP comes in. Connect with a U.S. licensed provider online and pick up safe, effective treatment at your local pharmacy that same day. Plus, get birth control and more delivered in all 50 states. Take control with comprehensive sexual and reproductive care, all from your phone. WISP. That's hellowisp.com. The waiting room can wait.
I wanted to share a phone call with you all that I had with a friend earlier today that I cannot stop thinking about. My friend invested $1,000 in Amazon stock back in the 90s. Now, back in the 90s, Amazon was a speculative stock. He found the needle in the haystack. This is almost impossible to find. He got a stock tip, he decided to take action on it, and for him at the time, $1,000 was a significant amount of money. Not to mention that back in the 90s, the amount of people that were investing into stock was still a very exclusive amount. Investing into the stock market is exclusive now, and only the top 10% of the richest people in the United States are investing. You can imagine what it was like back in the 90s. Now we have applications that have democratized the system, or at least are working towards the democratization of the system. There's resources like mine, etc. If we account for inflation, this investment would have been $2,000 invested in today's money. He completely forgot about this account, just sort of let it go. And then today he worked to try and figure out where that account was and moved through the process, found it, and he discovered that his investment is now worth over $200,000. And I wanted to take a moment to just process what happens not only when we invest in the market. Granted, he did do a speculative move, which is something that I am advising against today. However, it was only $1,000. While that might have felt like a lot, it wasn't like it was going to impact him in any significant way had he not found the needle in the haystack. But what I reminded him of is that if he would have kept up with that account, I am willing to bet that he would not have those $200,000 today. I'm willing to bet that either in the 2000.com bubble burst or in any other down cycle, he would have just sold out. What tends to happen when we pay too much attention to the stock market and we treat it too precious is our emotions get involved, right? Remember the sentiment that I was talking to you about earlier. It is a collective sentiment of people that are feeling some of the same emotions, and they begin to react in some of the same ways. And so I believe that him losing the account, losing track of the account, was one of the greatest blessings because it truly allowed for that investment to grow. It's a testament to what can happen when you have a long time horizon. It is something that has happened with me in my investment. Most of you all know that an investment of $9,000 turned into $500,000. And that was back in 2020, and then continued to expand in other ways and eventually doubled in other investments that I have. And so all of this to say that what happened to him is very unique. And so be very cautious of speculation. But what isn't unique is the type of expansion that can happen when we don't get emotionally attached to our portfolios and we don't treat it too precious and we aren't selling in and out of the market, trying to beat the market or time the market. A long time horizon works. This is something that Warren Buffett talks about all the time. The longer you have an investment in the market, the less risky it will become. I'm going to leave you all with that. Thank you so much for listening to this week's episode of Investies. You're listening to an In Luz We Trust and a Cosmic Standard production. A very special thank you to the team, Aisha Simpson, Eliza Smith, and Jacob Winnick.
Prescriptions, copays, lab tests. Even with insurance, healthcare can cost thousands every year. But not for me, because I'm enrolled in VA healthcare. My service was then. My benefits are now. Get what you earned. Visit choose.va.gov.
Not all veterans are eligible for the type or amount of benefits mentioned here.